Everybody, welcome back to our SSCMA classes. So yes, this is Soumya Santosh, a CMA finalist, and today we are going to start our new chapter of direct taxation, and the chapter is going to be assessment of companies, and this is for CA final and CMA final students. Okay, so let's get started. Okay. So in this chapter, first of all, we have to understand what is domestic company and what is foreign company. We know foreign company is that company which is not domestic company. So first of all, we have to understand what is domestic company, yes. And to understand domestic company, we have to understand Indian company first. So we are going for the companies and all. Okay, we are going to understand furthermore about in this chapter and tax rates and all. Okay, so let's get started, guys. So, in assessment of company is considered as the separate SEC for income tax purpose. This we know. Okay. Tax on the total income of the company is assessed through the principal officer of the company under section 2 subsection 17 of the Income Tax Act. 1961, a company is defined as, first of all, an Indian company. So yes, we have to understand Indian company na? Yes. And apart from that, companies, what are company? As I say, first is any Indian company, second any body corporate incorporated under the law of a country outside India. First of all, they are saying any Indian company or any body corporate which is corporated under the law of country of outside India. Okay, which means any foreign company, right? Yes, any institution, association or body which is assessable or was assessed as a company for any assessment year commencing on or before 1st April 1970. Okay, so yes, any institution, any association or body which is assessable or assessed as a company before or on or before the date is 1st April 1970. Okay, yes, hope so this up to this is clear now. It's very simple. Okay, and fourth, any institution, association or body whether incorporated or not, and whether Indian or not. So yes, whether it's any body corporated, okay, any institution, association, body corporate, whether it's incorporated or not, whether it's Indian or not, okay, which is declared by general or special order of whom? CBDT. Okay, the special order or general order passed by whom? The CBDT to be as the company. So there are four things mentioned here, right? Any Indian company, okay, any company, any body corporate associated incorporated in law of outside India, as per outside India, which is foreign company, right? Third, institution, association of body assessable or was assessed, okay, on or before 1st April 1970, yes, 1970, or any institution, association or body corporate, right, which was whether incorporated or not, whether Indian or not, as per the special order or general order by whom? CBDT, would be considered as company. Hai. So there are four things mentioned in this. Okay, so these are the classes of company, classification of company into domestic company, okay, and foreign company is relevant because the rate of income tax is different for domestic and foreign company. We know this, okay, but we are going to read in this chapter. Okay, so let's, as per section 2 subsection 26, the Income Tax Act 1961, what is Indian company now, right? The very first thing mentioned was any Indian company, right? Under 217 of Income Tax Act 1961, a company is defined as any Indian company. So we have to understand what is Indian company now. Okay, so Indian company means a company formed and registered under the Companies Act 1956, okay, which includes company formed and registered under any law related to company. Okay, so if any company was formed and registered, right, which was formed and registered, both of the condition is to be fulfilled, formed and registered, okay, under any law related to company, right, related to company, formally in force in any part of India other than Jammu and Kashmir. We are not going to take Jammu and Kashmir's law here, okay, the company which was formed there, we are not going to take that part, okay, other than Jammu and Kashmir and the Union Territory specified in subsection 3 of this clause. Okay, so can I say the first thing, the very first point says any company formed, let me write here, okay, formed plus registered. ठीक है, as per any law of the companies other than Jammu and Kashmir and other territory wala part. Okay, let's go for the second point. Corporation established by the central or state or provisional act. Okay, so any corporation which is established by the central or state or provisional act, okay, they would be considered as Indian company. Any institution, association or body which is declared by board to be under by the company under the clause 17. So if it is declared by whom, institution वगैरह वगैरह, बस declared by whom, board. ठीक है, any institution, association or body, okay, which is declared by the board in this case, ठीक है, which is to be declared by board, that is going to be the Indian company, right. Fourth, in case of Jammu and Kashmir, the state of Jammu and Kashmir, the company formed and registered under any law for time being in force in that state, okay, as per that state's law. ठीक है, which states? Jammu and Kashmir. We are talking about Jammu and Kashmir because in very first point we didn't take Jammu and Kashmir wala part, right? So for Jammu and Kashmir, if it is registered under that state, in as per their state, ठीक है, in that case that would be also Indian company. In case of any union territory of Dadra and Nagar Haveli, Goa, Daman, Diu and Pondicherry, a company formed and registered under any law for the time being in force. ठीक है ना, because they are the union territories वाला part. So as per their territories, union territories law, they would be considered as Indian company. Okay, so provided that the register or any other case may be principal office of the company, corporation, institution, association or body in all cases is in India. Okay, so now I know what is the meaning of Indian company. Now very first thing I have to understand what is domestic company. Okay, I know what is the meaning of foreign company. Foreign company is that company which is not a domestic company. So I have to understand what is the meaning of domestic company. ठीक है, and why are we reading this much thing? Because in further we have to compute, there would be practical questions and all, we have to understand, they would not be mentioned the tax rate in the questions. Okay, so we have to understand whether this is domestic company or foreign company, as that is going to be mentioned in the question itself. Okay, so we have to understand that these provisions are for domestic company or not. Okay, if it is not for domestic company, then in that case that would be ultimately the foreign company. ठीक है, very easy part. ठीक है, let's go for the domestic company. Domestic company is an Indian company, and we know what is the Indian company. Okay, these things which I said, formed and registered for Jammu and, other than Jammu and Kashmir and Union Territory, same thing for these two things. ठीक है, as per their law. ठीक है, and any corporation established by board, institution and all के लिए board is going to be declared. ठीक है, so very simple. Okay, so yes, domestic company is an Indian company. Now I know this. Okay, any other company, okay, now they are going to say any other company, ठीक है, income liable under the income tax which is non-Indian company. As here I say any other company, okay, which means other than domestic company or other than company which is not established in India, okay, which means non-Indian company. Okay, so for non-Indian company, if they have made the arrangement, two things, if they have made the arrangement for declaration of dividend within India, okay, so declaration of dividend within India, in that case that is going to be what, the domestic company. Second, payment of dividend. Okay, if they have made all the provisions related to payment of dividend in India, either declaration of dividend is in India or payment of dividend is in India, okay, including dividend on the preference share payment out of the income, this thing is going to be considered, this company is also going to be considered as a domestic company. कौन सा company? The non-Indian company, in which case either they have declared the dividend in India or make the provisions of payment of dividend in the India. ठीक है, so in this case also the non-Indian company would be the domestic company. Now it's easy now. So let's go for the provisions. What is mentioned here? Domestic company means an Indian company or any other company which has made the prescribed arrangement for the declaration and payment of dividend within India. Simple है ना जी हाँ. Thus, a non-Indian company can become a domestic company if it makes prescribed arrangement. Yes, it is super clear for the declaration and payment of the dividend within the India. Such prescribed arrangement are the share register of its shareholder shall maintain at its principal place of business within the India. Second, the general meeting for passing the account and for declaring dividend shall be held at place within India. ठीक है, the dividend declared shall be made available within India to all the shareholders. Okay, so now I know what is the meaning of dividend, domestic Indian. Okay, and whether the non-Indian company would be domestic company or not. ठीक है, now let's go for the foreign company. ठीक है, foreign company simply saying any company that is not a domestic company would be a foreign company. Now I know the meaning of domestic company. Now I know the meaning of Indian company. As the very first point of domestic company is saying the domestic company is an Indian company. Okay, so that's why we were reading these all Ramayan, ठीक है, to connect everything. So now we know the meaning of Indian company, now we know the meaning of domestic company, now we know the meaning of foreign company. ठीक है, what a relief now. Let's go for what is further written here. Indian company means a company formed and registered under Companies Act 2013 and its registered office or principal places situated in India. It also includes a corporation established under state or central state act or any institution or association or body which is declared by simple, which I have already told you. ठीक है, these things I have already mentioned earlier. ठीक है, so company, class of company would be domestic company and second foreign company. I know this. ठीक है, let's go for the residential status of the company as per section 6 subsection 3. A company is said to be resident in India in any of the previous year if it is Indian company. ठीक है, so now we know what is the meaning of Indian company. Yes, if it's POEM, place of effective management, is that year is in India. Now I know the meaning of POEM na. Do you remember we already discussed in the international taxation wala part, ठीक है, नॉन रेजिडेंट वाला पार्ट. ठीक है, सो दिस इज ऑल्सो सुपर क्लियर टू अस. देन अ कंपनी इज नेवर नॉट ऑर्डिनरी रेजिडेंट. ओके, अ कंपनी विच इज नॉट रेजिडेंट अकॉर्डिंग टू द अफोरसेड कंडीशन इज कॉल्ड अ नॉन रेजिडेंट कंपनी. Okay, so these are the very simple thing which is written here. Let's go for now the rates of domestic company and foreign company. Okay, so yes, tax rate in case of domestic company and foreign company. Okay, where its total turnover gross receipt in the previous year 2020-21 does not exceed rupees 400 crore. ठीक है, what if it does not exceed and what if it exceeds? Okay, if do not exceeds, in that case it's going to be 25%. ठीक है, if it do not exceed, in that case what is going to be the tax rate for the domestic company? It's going to be 25%. Yes, in any other case for the domestic company, I'm talking about the domestic company now. ठीक है, so what if it exceeds 400 crore, right? The turnover and the gross receipt in the previous year 2021, ठीक है, in the previous year do not exceed 400 crore. In that case, that is going to be tax rate is going to be 25%. What if it exceeds? In that case, the tax rate is going to be 30%. ठीक है, it's very easy. Okay, we know this already. ठीक है, and what is going to be the surcharge on the total income tax? If the total income exceeds 1 crore, okay, so let me write here 1 crore but do not exceed 10 crore. In that case, surcharge for the domestic company is going to be 7%. Okay, it's going to be 7%. But what if the total income exceeds 10 crore? ठीक है, in that case the surcharge is going to be 12%. So can I say there would be two tax rate, 25%, 30%. 25% for what wala case? 400 gross receipt and turnover if it do not exceed. ठीक है, what is going to be surcharge? 1 crore से 10 crore तक कितना? 7% bro. Yes, and if it exceeds 10 crore, in that case is going to be 12% surcharge. ठीक है, very simple. Let's go for the foreign company. What is foreign company? Which is not a domestic company na? Yes, so for foreign company it's going to be 40%. ठीक है, whether they are having more turnover, whether they are having more gross receipt, we don't care. ठीक है bro, इधर आओ, you are going to be pay tax at the rate of 40%. We don't care about your gross receipt. ठीक है, whether it's 1 crore, 10 crore, 30 crore, 400 crore, you have to pay tax at the rate of 40%. 5% G. So let's go for the surcharge. ठीक है, if the total income same thing 1 crore say 10 crore, the surcharge for the foreign company is going to be 2%, right? And if it exceeds the 10 crore, the total income exceeds the 10 crore, in that case what is going to be surcharge? Surcharge is going to be 5%. ठीक है, okay, so hope so this is clear. 25, 30, right? For the foreign company is going to be 40, ठीक है, then 7, 12, right? For this 2, 5. Okay, so let's read what is written in this part. Okay, computation of total income of the company. Ascertain the taxable income under each of the head and arrive at the gross receipt income after set off of losses of the current year or brought forward loss of the early years. From the gross total income, a company is eligible to claim following deduction under section 80, 80G, GGA, GGB, 80IA, 80IB, 80IA, ठीक है, 80IC, 80IE, 80JJ, 80JJAA, 80LA, 80M, 80PA. The balance is the total income. ठीक है, rate of tax is going to be, yes, for domestic company we know this, ठीक है, 25, 30. Apart from that, let's go for the winning under section 115BB. It's going to be 30%. STCG 11A, it's going to be 15%. LTCG 112, it's going to be 10% and 20%. LTCG for 112A, it's going to be 10%. For other, it's going to be 30% and 25%. We know this. Okay, yes. Note, under section 115BA, if the turnover of the gross receipt of the domestic company in the previous year 80-90 does not exceed 400 crore, tax shall be at the rate of 25% instead of 30%. We know this, right? Okay. Surcharge 7%, 12%. For the foreign company is going to be 40%, surcharge 2% and 10%. ठीक है, ओके, हाँ 2% एंड व्हाट, कौन सा वाला था ये 5%, ठीक है, ये रिमेनिंग पार्ट आई हैव नॉट मेंशन हियर. ओके, 2% इफ इट्स अप टू 1 to 10 crore, ठीक है, and 5% if it exceeds the 10 crore. Okay, yes. So now here comes the main thing. ठीक है, there are different section and for different things and all. ठीक है, as per section we are going for domestic company, as we read there was 25% the taxable rate, right? But for the different circumstances it would be different. Like it would be 25%, 22%, 15% and all. Now we have to understand what are the circumstances. Okay, in that case we have to apply these tax rates. Okay, and trust me guys, if you go through this June 2024 attempt in direct taxation, there were so many questions asked from this chapter. Okay, whether if you want to go, please go for it. Okay. In MCQ also there were so many questions asked from this chapter, ठीक है, even in the practical question also, ठीक है. So you have to go for this chapter. If you left this chapter, so dear, you will lose everything, ठीक है, 20 to 30 marks, you are going to lose 20 to 30 marks. So yes, it's very important. So let's get started from 115B. What is this 115B? ठीक है, section 115B is of tax on income from the life insurance business. Okay, if any SSC whose total income include any profit and gain, okay, which is derived from the business of what? The life insurance. Let me say it again. If any SSC, ठीक है, okay, whose total income include any profit or gain arising from what? Arising from the business of life insurance. In that case, for that only insurance business, he have to pay tax at the rate of 12.5%. Or what about the remaining income apart from the life insurance business wala? That would be chargeable at the rate of normal provision, as per the normal provisions. Okay, yes. So for this part, if any of the person, any of SSC engage in insurance business, what I said, insurance business, in that case any income derived from the profit or profit and gain from that life insurance business, ठीक है, would be taxable at the rate of 12.5%. 12.5%, and the section is 115B. 115B is for 12.5%. life insurance business, life insurance business, life insurance business. Okay जी, हाँ जी. So for the remaining, it's going to be apply what? The normal taxable rate is going to be applied. Note, MAT provisions are not applicable on the life insurance business. Now let's read what is written in this section, section 115B. कौन सा वाला? लाइफ इंश्योरेंस वाला, ठीक है जी। आओ, टैक्स ऑन द प्रॉफिट एंड गेन ऑफ लाइफ इंश्योरेंस बिजनेस, whether total income of the SSE include any profit and gain from life insurance business. The income tax payable shall be the aggregate of the amount of income tax calculated on the amount of profit and gain of the life insurance business, including the total income, at the rate of 12.5, which is 12.5% now. Okay ji. The amount of the income tax with which the SSE would have been chargeable had the total income of the SSE being reduced by the amount of profit and gain of the insurance business. Simple. So as per 115B, 12.5% is going to be taxable rate on what? Life insurance business wala part. Okay. Apart from this income, normal provision is going to be applied. Okay. So yes, it was super duper clear. Okay. Let's go for tax on the income on certain domestic company. Now this section, the as last section was of 115B, right? 115B. Okay, so we are going for the sequence. Don't get confused. We are going for the sequence, right? So 115B. Okay, so next section would be 115B. Now, this is for which company? Domestic company. Domestic company. ठीक है. So the rate is going to be 25%. ठीक है जी, rate is going to be 25%. So what is the difference? Okay, don't get confused. I'll tell you the difference between each and every sections. ठीक है, as earlier what I said, for those company who have the turnover or gross receipt less than 400 crore, less than 400 crore is going to be taxable rate. The taxable rate is going to be 25%, right? So same thing is they are saying now 25%, but the surcharge is different. Earlier that was 7-12%, right? Here they are saying surcharge is going to be 10%, okay? And HEC, which is apply everywhere, ठीक है? In every case it's going to be applied. That is going to be 4%, ठीक है? Cess, okay? But if the company is set up and registered on or after 1st April 2016, it's going to be applied for only those company which have been set up, which has been set up and registered, ठीक है, on or after. Okay, on or after. They are not going to consider those company which have already set up or registered before 1st March 2016. So let me write here the 1st March 2016 on or after the company which has been set up and registered. Okay, for only those company this rate is going to be applied. ठीक है, okay, but the company should not engage in other than the business of manufacture or production of any article of the thing plus research in relation to this thing. ठीक है, which thing? Relation to manufacture or production of any article of things. They can also go for the research in relation to this, ठीक है, which is related to distribution on such article things manufacture produced by it. ठीक है, so yes, let me read this section now. ठीक है, 115BA, 115BA says rate 25%, 10%, then 4%. ठीक है जी, yes. 115BA, notwithstanding anything contained in this act, but subject to the 27 other provision of this chapter, the income tax payable in respect of the total income of person being a domestic company for any previous year relevant to the assessment year beginning on or after 1st April 2017 shall be opt on such person be computed at the 25%. Okay, for the purpose is going to be the condition the company has been set up and registered first on or after 1st of March 2016. Yes, the company is not engaged in any of business other than business of manufacture or production of any article or things or research. So for this the company have to fully, ठीक है, have to fully engage in the business of manufacture, ठीक है, business of manufacture or production or any other article, okay, or any of the research is related to this part. Which part? Business of manufacture and production and article of things. Okay, if any of the business is engaged in any other part, in that case they would not be eligible for this part. मतलब they are not going to get this benefit 25%, 10% and 4%. ठीक है, okay. So for this they have to set up and registered the company after 1st March 2016. Yes, and they should be only engaged in the manufacture, business of manufacture or production or article of of any article or things, ठीक है, and research in relation to these things, distribution and all, ठीक है, distribution of such article, things manufactured and produced by it. The total income of the company has been computed without any deduction under provision of 10AA. So there would be some benefited, as we know, some of the deduction would be available for the normal taxable person and all and the company, but in this case the company cannot go for such deduction, and they are as per section 10AA or subsection 1 of section 32, section 32 AD, 32 AC, 33 AB, 33 ABA, or subclause second A or subclause 3 of subsection 1 or subsection 2AA or subsection 2AB of section 35, 35 AC, 35 AD, 35 CCC, 35 CCD, ठीक है, or under any provision of chapter 6A under the head C, deduction in respect to other than ATJJA. So can I say the company is not going to get the deduction, okay, deduction of what, 10AA, ठीक है, section 32 वाला section, okay, they are not going to get that deduction benefit. 32 AC, yes, 32 AD, yes, ठीक है, 32 AB, 32 ABA, 33 ABA, ठीक है, 33 A भी था ये, okay, and then 35 special scientific research वाला, 35 AB, sorry, AC, AD, CCC, CCD, ठीक है, and but only one deduction would be allowed, ठीक है, which is of deduction under section JJA would be only allowed in this case. If the company is going for opting this section, ठीक है, if they are going for 115BBA, the tax rate is going to be 25%, 10% surcharge and 4% cess, ठीक है. For them, they are not going to get any deduction, right, any deduction under this chapter, but they will only get the benefit of deduction under section 80JJA, okay, that is going to be allowed, ठीक है, without set of any losses carry forward from earlier assessment year. If such loss is attributable to any deduction, refer to subsection, subclause and all. Depreciation, as we told, ठीक है, the loss referred to subclause second of clause C of subsection 2 shall be deemed to have been already given full effect, and no further deduction for such loss should be subsequently given forward, ठीक है. Nothing contained in the section shall apply unless the option is exercised by the person in prescribed manner or before the due date specified under subsection 1 of 139 for furnishing the first of the return of the income which the person is required to furnish under the provision of Act. Income tax taxable, the rate of special rate shall be taxable at special rate of the income tax payable on that income. We know this, ठीक है. So yes, for these things that the rate is going to be 25, 10, 4 plus plus plus, ठीक है. But only one deduction would be allowed, ATJJA wala, other than no deduction would be allowed, okay. So yes, let's go for the second 115BAA. Earlier it was what? Let's not mess up everything. Let's go for one by one. 115B says about the insurance wala, right, 12.5%, okay. 115BA, 115BA for the domestic company, okay, domestic company after Konsa 1st March 2016, 1st March 2016, right, set up and registered, okay, rate is going to be 25, 10, 4, okay, G, ठीक है. They should be only be engaged in this manufacture and producing the article or thing, and which is related to the research and all, ठीक है. Research and all should be related to the distribution of such article, things manufactured and produced by it, okay. So yes, no deduction is allowable, right, under these section, but only one section is going to be allowed, ATJJA, okay. Hope so this part was clear. Let's go for the next part, 115BAA. 115BAA. This is also saying the same thing, ठीक है, but the rate is going to be 22%, okay, 22%, okay, surcharge 10%, cess 4%, okay. So yes, let's see what is the difference, and one more deduction would be allowed. Earlier what I said in last previous section, there would be ATJJAA, ठीक है, वाला section would be allowed, right? But in this case 80M would also be allowed, okay, the deduction of 80M would also be allowed. So let's read out here. Okay, this section 115BAA provides for the concessional rate of 22% plus surcharge 10% and HEC cess at the rate of 4% for the domestic companies, subject to the certain condition like non-availability of profit linked deduction and investment linked tax deduction, non-availability of deduction for the contribution to research and development and additional depreciation, etc. They are talking that they will not get the deduction or under these sections and all. Okay? Subject to the certain condition like non-availability of profit linked deduction and the investment linked tax deduction, non-availability of deduction for the contribution to this research and development and additional depreciation, etc. Condition for the company to be assessed under section 115BA, 115BA, yes, BAB. Okay, company is not allowed following exceptions and deduction while computing as total. For these section, everything is same. Okay, the deduction which they are not going to be get. Okay, for as per section 10AA. Unit in cess, they are not going to get the benefited the deduction under these sections. Okay, section 32 additional depreciation wala section on new plant and machinery, 32AD investment allowance wala section, 33AB deposit in the tea development account. Okay, 33ABA production of petroleum or natural gas, 35 payment to outsider for the research and expenditure in house research, 35AD capital expenditure or the specified business expenditure, 35 CCC is related to expenditure on the agriculture extension project, 35 CCD is related to the expenditure on skill development project. These things we are going to read in depth in the profit and gain wala chapter, business and profession wala chapter. Okay, so don't worry. Okay, so but apart from that, as I told you in earlier, we get a deduction of 80 JJA. Okay, and in this section, along with that section, we are going to get the domestic company is going to get the benefit of 80M also. Okay, brought forward loss is such loss is attributable to the afforded deduction on an absorbed additional depreciation, but a company is assessed under section 80BB 115BAA or BAB, it is not liable to MAT. Okay, the provision of MAT is not going to be applied in this section if the company opt for this. Okay, so let's read out a very quick things which is mentioned here. As per 115B, what I told you, insurance business wala, what is going to the rate? 12.5%. Okay, so 115BA and as per 115BAA, they are the similar things which is mentioned, right? The tax rate is different, that's it. Okay, the company can go for any of the sections, either they can go opt for 115BA or 115BAA. Okay, and it's going to be applicable for the domestic company. Okay, for this 115BA, if any of the companies engage in manufacturing and production of activity plus research wala part, research should be also related to this. Okay, if the company is not related to manufacturing and production of article or things, in that case this part, this section is not going to be benefited to them. Okay, they cannot go for opting this section. Okay, so what is going to be taxable rate? 25%, 10%, then 4%. Okay, deduction 80 JJAA, only this section the deduction would be available to them, only this 80 JJAA deduction would be available for them. Okay, let's go for section 115BAA, which is for domestic company, right? Can opt. Okay, either company can offer this or this. Okay, they have the options with them. Okay, what is going to be the taxable rate? 22%, right? And what is going to be surcharge? 10% and 4%, and deduction would not be allowable in both the cases, right? But other than one additional deduction was allowed, right, which is of 80M. Okay, those company who are opting for 115BAA, okay, they can go for this additional benefit 80M wala. Okay, so hope so guys this was clear to you. Let's make a very quick revision. Okay, so in this lecture we have covered what is the meaning of Indian company, right? So these are things which I have mentioned, and there are two companies classified, domestic and Indian foreign company. Now we know the meaning of domestic company, those who are Indian company and those who have made the arrangement of declaration of dividend and payment of dividend in within the India. Okay, yes. So yes, let's go for the residential. We know this and all. Okay. So 25% was the tax rate for the domestic, 30%, right? 400 crore gross receipt, total turnover, okay, and what was the surcharge? 7-12%, right? And in this case for the foreign company rate was pehle 40%, right? And what is the surcharge? It's going to be 25%. Okay, for this insurance wala, what was the section 115B, 115B, yes, for the profit, tax on the profit and gain of the life insurance business rate is going to be 12.5%. Okay, no MAT provision is going to be applied. Yes. For the remaining remaining income is going to be normal provision is going to be applied, normal tax provisions. ठीक है जी, yes जी. For 115BA domestic company कौन सा? After 1st March 2016 जी, after 1st March 2016, ठीक है, yes. So set up and register after this 1st March 2016, on or after. Okay, and one more thing, if the company is not engaged, if engage in other than this manufacturing or production or any article, then they are not going to be eligible for this. Okay, so the company have to do the business related to manufacturing, production of article and research related to this part. Okay, yes. And what is going to be the taxable rate here? That 25%, 10% and what? 4%. जी हाँ. And these section, the deduction would not be allowed. ठीक है, same deduction 80A, sorry 10AA, ठीक है, 32 वाला, 32 AD, 33 AB, 33 BA, 35 AD, 35 CCC and 35 CCD. ठीक है, only there is two difference, one difference कि इस वाले पार्ट में 115BA and 115BAA, ठीक है, 25%, 22%, same 10%, 10%, 4%, ठीक है जी, ठीक है, but the deduction in both the cases not going to be applied. ठीक है, ये वाला deduction, ठीक है, but in this case 80JJAA is only allowable. In this case 80JJAA plus 80M would be allowed. ठीक है, allowed. Yes, so that's it. This was a wind up of of this lecture. ठीक है, not this chapter. So yes, this chapter is really very much important. Stay tuned. I'll upload the continuation part, okay, very soon. So you have to be consistent and solve question as much you can, guys. ठीक है, and don't go for rectification, go for the clarification. ठीक है, so you'll get things more easier. Okay, that's it. This is सौम्य संतोष and we'll meet in our next video. तब तक के लिए पढ़ते रहो, खुश रहो, मस्त रहो. To the guys.